If someone told you that a great flood was coming, not of rain or rivers, but of collapsing value, a flood that could wash away trillions of dollars, drown entire markets, and erase the wealth that millions of people once believed was safe, would you believe them? Imagine a tidal wave silently forming beyond the horizon, a wall of water built not from nature's fury, but from decades of easy money, political division, and blind faith in a system that promised stability, while quietly rotting beneath the surface. Some call that wave a financial correction, others call it a cycle. But if you listen closely to the murmurs of economists, the panic of traders, and the calm voices of those who remember 2008, you might sense something far larger taking shape. Something that feels less like a correction and more like a reckoning. Because today, as governments quarrel, as debt balloons, and as the foundations of trust begin to shake, one ancient signal has begun to flash again. Gold, that old silent witness to every empire's rise and fall, has just crossed $4,000 an ounce, the highest price in human history. To the casual observer, it's a simple headline. To those who have seen this story before, it's a flare shot into a dark sky. It says, the flood is already coming. Gold is not supposed to move like this. It is not a tech stock or a cryptocurrency. It is not driven by quarterly earnings or social media hype. It is heavy, slow, and eternal. And yet, in moments of global panic, it rises like a ghost from the past, reminding us that for all our modern sophistication, we still run back to the same elemental refuge. Gold does not promise profit. It promises safety. And when safety becomes more valuable than growth, it usually means the system is trembling. The irony is that we have seen this pattern again and again. Whenever the world begins to lose faith, gold becomes the mirror reflecting that fear. It happened in the 1970s, when inflation devoured wages faster than paychecks could rise. It happened in 2008, when the very institutions meant to protect savings turned out to be casinos in disguise. It happened again in 2020, when a microscopic virus froze the planet and governments printed more money in a year than they had in decades. And now, in 2025, we are here once more. Only this time, the fear feels deeper, quieter, and harder to escape. Look at what's happening around us. The United States government is paralyzed, trapped in yet another budget war. A shutdown that freezes public services has become so common it no longer shocks anyone. And that normalcy is perhaps the most frightening part. When the largest economy in the world can no longer pass a budget, the rest of the world holds its breath. The data stops flowing, markets hesitate, and the numbers we rely on to measure reality simply vanish. When people can no longer trust the numbers, they turn to what cannot be manipulated, the weight of metal in a hand. That is how trust dies. Not with explosions, but with silence. Meanwhile, the Federal Reserve stands cornered. To save growth, it must lower interest rates. To fight inflation, it must raise them. Every decision risks either panic or paralysis. The entire global system now moves on the nervous tremor of one institution that itself admits it no longer knows what will work. The result is uncertainty, and uncertainty historically is gold's favorite fuel. Beyond America, something subtler is happening. Central banks, from Asia to the Middle East, have been buying gold as if it were disappearing. In Beijing, in Moscow, in New Delhi, and Ankara, vaults are filling with bars, stamped in silence. They are not buying because they believe in gold's charm. They are buying because they no longer believe in the dollar's invincibility. The weaponization of finance, the freezing of reserves, the sanctions that can erase entire economies has shown the world that money inside the Western system is not truly free. It can be switched off. Gold, on the other hand, cannot be sanctioned, deleted, or blocked by software. It simply exists. Immune to politics. This quiet movement is reshaping the global landscape. Nations once content to hold U.S. debt now want tangible reserves. The world's old habit of trusting American paper is eroding, replaced by a desire for something physical. Slowly, the balance of confidence is shifting from the abstract to the elemental. And while politicians keep debating policy, the world's treasuries are preparing for a storm. But this is not just about nations. It's about psychology, a deep, almost primal emotion buried in the human mind. Gold does not innovate. It does not employ people. It does not pay dividends. It just sits there, glowing softly, waiting for the next crisis. Yet people pour their savings into it, generation after generation. Why? Because gold represents something money has lost: honesty. When people buy gold, they are not chasing opportunity. They are running from lies. They are saying, in one quiet collective voice, "I no longer believe." When governments promise that inflation is temporary, when banks tell us everything is fine, when markets celebrate while ordinary life becomes harder, somewhere deep down, we know the story doesn't add up. Gold is that realization, turned into metal. It is disbelief, solidified. And every time it rises, it's not because people are getting richer. It's because faith is evaporating. History remembers these moments with uncanny precision. In 1971, when President Richard Nixon ended the dollar's link to gold, he set money free from physical reality. It was a revolutionary idea, the belief that trust alone could anchor value. For a while it worked, but trust is not infinite. Over the decades, it has been stretched thinner and thinner. Each new crisis forced governments to print more, spend more, and promise more, until those promises became currency themselves. When everything depends on faith, faith becomes fragile. And when faith breaks, people run back to what they can touch. Gold's long history is not a story of prosperity. It is a record of fear. Every major surge has marked a moment when something bigger was breaking. In the late 70s, it was inflation and oil shocks. In 2008, it was the financial system itself. In 2020, it was global paralysis. And now it is the slow erosion of belief. Belief in governments, in data, in the idea that tomorrow will look like today. Behind the scenes, powerful hands are already preparing. China has spent years converting its trade surpluses into physical gold, slowly reducing its dependence on U.S. treasuries. Russia, cut off from the Western banking system, has turned to gold as the backbone of its currency. Across the global south, nations are quietly doing the same. They are not announcing it with press conferences. They are doing it quietly, methodically, ton by ton. Because in geopolitics, silence is strategy. If you step back and look at the map, a new pattern emerges. The West still owns the financial infrastructure, but the East is accumulating the substance. Gold is flowing from New York and London toward Shanghai and Dubai. It is wealth migration in metallic form, a slow reversal of decades of imbalance. The dollar once united the world under one system. Gold is now dividing it into two. One side still believes in promises. The other prefers proof. For ordinary people, this shift feels distant, abstract, maybe even irrelevant. But it isn't. Every time the dollar weakens, the cost of living changes. Every time central banks panic, inflation steals quietly from your wallet. Every rise in gold reflects the value leaving your money. It's not just an investor's chart, it's a mirror of daily life. And yet, even as gold climbs, we find ourselves trapped in a strange contradiction. We crave stability but fear stagnation. We want innovation but distrust risk. So we build systems designed to give us both constant growth and eternal safety. And then we act surprised when the math doesn't hold. The flood that's forming now is not the result of one bad decision. It's the accumulation of many small ones. For decades, the world has been building higher levees of debt, patching each leak with borrowed time. Eventually, the weight becomes too much. Some say gold is rising because of speculation. Others say it's central bank manipulation. But beneath all that noise, the real story is simpler. People are losing faith in the story of progress itself. The idea that we can print, spend, and inflate our way to endless prosperity is dying. In its place grows a darker, quieter truth. That maybe the system was never as stable as we wanted to believe. The flood, then, is not a single event. It's a process already in motion. You can see it in every government that struggles to pay its bills, every currency that slips quietly in value, every generation that earns more on paper but owns less in reality. And gold, passive, silent, unchanging, is simply the measuring stick of that decay. As gold rises, it rearranges the world's hierarchy of power. It shifts leverage from those who print wealth to those who hold it. For a century, America's dominance came from the fact that its currency was everyone's foundation. Now, as that foundation trembles, other nations are building their own floors. And they're building them out of metal, not trust. The 20th century belonged to oil and the dollar. The 21st may belong to energy and gold. And unlike oil, gold doesn't run out. It just changes hands. So what does $4,000 an ounce really mean? It means the old world of paper promises is being tested by the weight of reality. It means people have stopped believing that words like stability and growth can be summoned forever. It means trust, that invisible currency on which every financial system depends, is leaking away. Gold's surge is not a victory dance. It's a distress signal. It tells us that we are approaching the edge of a cycle, the point where belief collapses and something new must take its place. Maybe this flood will bring destruction. Maybe it will bring renewal. But either way, it will not be gentle. When people rush to buy gold, they are not dreaming of a bright future. They are preparing for a darker one. The last time the world lost faith this deeply, it rewrote the rules of money, created new institutions, new currencies, new alliances. The same may be happening again, only slower, beneath layers of denial. For now, the screens still glow. The markets still hum. The headlines still promise recovery. But underneath, the water is moving. Quietly, steadily, inevitably. You can feel it in the tone of analysts, in the tightening of budgets, in the way people glance at prices and mutter that everything feels more expensive. You can feel it in the fatigue. Not just economic, but psychological. The sense that we've been here before, that we've ignored the signs too many times. So when you see the gold price flash across your feed, when you read that another record has been broken, don't think of it as a number. Think of it as a pulse. Each dollar higher is another heartbeat of global anxiety. Each ounce bought is another vote of no confidence in the future we were promised. Maybe that's what the flood really is. Not a sudden crash, but a slow drowning in disbelief. And maybe gold is not the ark that saves us, but the alarm that wakes us up. Because in a world built on promises, the things that float are never made of paper. Gold at $4,000 is not a story of wealth. It's a story of warning. The first glimmer of metal before the Great Financial Flood.